Welcome to FXTech's comprehensive analysis of the CHF JPY currency pair for October 13th through 18th, 2025. In this video, we'll examine the critical technical breakout, analyze the major news events that shaped price action during this period, and provide you with actionable trading strategies for both short-term and medium-term time frames. We've gathered data from 5 leading financial platforms, including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex to ensure you receive the most accurate and comprehensive market analysis. Whether you're a day trader or swing trader, this analysis will equip you with the insights needed to navigate the competing safe haven dynamics between the Swiss franc and Japanese yen. Let's dive into the analysis. Our analysis draws from 5 premier financial market platforms to ensure accuracy and depth. TradingView provides us with real-time price data and comprehensive technical indicators. Investing Live, formerly known as ForexLive, offers live market commentary and expert analysis as events unfold. ActionForex.com specializes in wave analysis and technical forecasts, giving us insight into Elliott wave patterns. Forex.com contributes market insights and critical pivot point analysis. Finally, Daily Forex delivers weekly forecasts and trading signals from seasoned analysts. By synthesizing information from these diverse sources, we eliminate single-source bias and provide you with a well-rounded perspective on Swiss franc to Japanese yen market dynamics. This multi-source approach is fundamental to our commitment to delivering reliable, actionable trading intelligence. As of October 20th, 2025, CHF JPY is trading at 189.927 Japanese yen, showing a modest daily gain of 0.103 or 0.05%. The day's trading range spans from 189.741 to 190.546, with volume registering at 15,480 ticks. Looking at broader performance metrics, the pair has gained 0.19% over the past week and an impressive 1.71% over the past month. The 6-month performance is particularly notable at 9.87%, while year-to-date gains stand at 9.62%. The 1-year performance of 9.49% confirms a sustained uptrend. These figures demonstrate consistent bullish momentum, with the pair benefiting from safe haven flows into both the Swiss franc and Japanese yen amid global uncertainty. On October 8, 2025, CHF JPY achieved a significant technical milestone by breaking through the key resistance level at 187.50. This level had previously capped gains at the end of September, making this breakout particularly meaningful. The break signals an acceleration of short-term impulse wave 3 within the larger intermediate wave 5 structure. Technical analysts at Action Forex have identified the next upside target at 192.00, representing substantial profit potential from current levels. The breakout is supported by a clear daily uptrend that has been building since mid-August. Market sentiment remains strongly bearish toward the Japanese yen, which continues to support upside momentum in this pair. This technical development represents a shift from consolidation to trending behavior, creating opportunities for momentum traders. 4 major news developments shaped Swiss franc to Japanese yen during October 13th through 18th. First, U.S.-China trade tensions escalated dramatically when President Trump threatened 100% tariffs on China over rare earth export restrictions. This triggered classic risk-off sentiment, increasing safe haven demand for both currencies. Second, the Federal Reserve hinted at 2 additional rate cuts before year-end, weakening the U.S. dollar and creating a supportive environment for CHF strength. Third, the Swiss franc reached multi-year highs, with USD/CHF testing 2025 lows for the 3rd consecutive time. The franc reasserted its dominance as the premier safe haven currency. Finally, coalition government uncertainty in Japan led to yen rallies on political risk premium, creating competing safe haven dynamics that resulted in range-bound trading between these 2 defensive currencies. During the October 13th to 18th period, CHF JPY traded within a relatively narrow range of 1.53 Japanese yen, from a low of 188.65 to a high of 190.18. The week began on October 13th with the pair closing at 189.37 after gaining 0.11%. October 14th saw continued gains of 0.10%, closing at 189.56. On October 15th, the pair reached its weekly low of 188.65 before closing at 189.61, up just 0.03%. The turning point came on October 16th when the pair reached its weekly high of 190.18, closing at 189.71 with a 0.05% gain. The final 2 days showed strengthening momentum, with both October 17th and 18th posting 0.13% gains and closing at 189.95. The price action reveals sideways consolidation with an upward bias, establishing support at 188.65 to 189.00 and resistance at 190.10 to 190.18. Understanding key technical levels is crucial for effective trade execution. On the resistance side, the nearest obstacle sits at 190.18, which represents the weekly high established on October 16th. Beyond that, Action Forex's upside target of 192.00 represents the next major resistance zone. For support levels, the nearest protection comes from the 189.10 to 188.96 range, which marks recent intraday lows. The second support level at 188.65 represents the weekly low from October 15th and has proven to be a solid floor during this period. The most critical support level sits at 187.50, which previously acted as resistance, but has now flipped to become key support following the October 8th breakout. Currently trading at 189.95, the pair sits comfortably between support and resistance, providing opportunities for both long and short strategies. For the next 1 to 2 weeks, we anticipate a neutral to slightly bullish outlook, with the pair likely to trade within a range of 188.50 to 190.50 Japanese yen. For long positions, consider entering on dips toward the 188.75 to 189.00 support zone, targeting a move to 190.00 to 190.50. Place your stop loss below 188.50 to limit downside risk, giving you an attractive risk-reward ratio of approximately 1 to 1.5. For short positions, look for entries near the 190.20 to 190.50 resistance area if bearish reversal patterns emerge. Target a move back to 189.00 and place your stop loss above 190.70, providing a risk-reward ratio of approximately 1 to 1.2. The key to success in this range-bound environment is patience, waiting for price to reach the extremes before entering positions. Looking ahead 1 to 3 months, we assign a 65% probability to the bullish scenario. This scenario assumes trade tensions persist or escalate, the Bank of Japan maintains its ultra-loose monetary policy, and safe haven demand remains elevated. Under these conditions, we target a range of 191.00 to 192.50, with the strategy focused on buying pullbacks to the 187.50 to 188.00 support area. The bearish scenario carries a 35% probability and would require trade war de-escalation, Swiss National Bank intervention concerns, or a return to risk-on sentiment. This scenario targets a range of 186.00 to 187.50, with the strategy focused on selling rallies if price fails above 190.00 and breaks below 188.50 support. The higher probability assigned to the bullish case reflects the current geopolitical environment and central bank policy divergence. Several risk factors could drive Swiss franc to Japanese yen higher than expected. Further escalation of geopolitical conflicts would increase safe haven demand, particularly for the Swiss franc. A sharper than expected global economic downturn would trigger flight to quality flows into both currencies, with Swiss franc likely outperforming. Increased European instability would boost Swiss franc demand, while the Bank of Japan maintaining ultra-loose policy longer than expected would weaken the yen. On the downside, coordinated central bank intervention to weaken CHF strength represents a significant risk. A sudden resolution to major trade disputes would reduce safe haven demand across the board. The return of risk on sentiment as geopolitical tensions ease would pressure both currencies. Finally, if the Swiss National Bank expresses concerns over franc strength and hints at intervention, this could trigger sharp downside moves in CHF crosses. Successful trading requires strict discipline and robust risk management. First, implement strict stop losses, ensuring that single trade risk never exceeds 2% of your account balance. Always set stop losses before entering positions and honor them without exception. Second, practice proper position sizing by avoiding heavy positions in a single entry. Scale into positions gradually and maintain lot sizes appropriate to your account balance. Third, maintain vigilant news monitoring, closely watching SNB and BOJ policy decisions, U.S.-China trade developments, and major economic data releases that impact safe haven flows. Fourth, remain flexible and adjust your strategy based on market changes, being prepared to exit positions if conditions shift against your thesis. Finally, maintain diversification by avoiding concentration in a single currency pair. Build a diversified portfolio across multiple instruments and timeframes to manage overall portfolio risk effectively. Let's summarize the key points from our analysis. Swiss franc to Japanese yen broke key resistance at 187.50, establishing bullish momentum with a target at 192.00. Safe haven dynamics dominate as both currencies benefit from risk-off sentiment driven by U.S.-China trade tensions. In the short term, expect range-bound trading between 188.50 and 190.50 with a neutral to slightly bullish bias. For the medium term, we assign a 65% probability to the bullish scenario targeting 191.00 to 192.50. Risk management is essential given the competing safe haven flows between Swiss franc and Japanese yen. Moving forward, monitor U.S.-China trade developments, watch for SNB and BOJ policy signals, trade within defined risk parameters with strict stop losses, and adjust positions based on evolving market conditions. Thank you for watching this FXTech analysis. Please subscribe for more market insights and trade safely.